Need a faster way to improve your business cash flow? Let's talk about invoice factoring. Factoring lets you sell your unpaid invoices to a factoring company and get immediate cash. No more waiting 30, 60, or even 90 days for clients to pay. Instead, you get up to 90% of the invoice value right away. Here's how it works. You issue an invoice, you sell that invoice to a factoring company, they give you an advance, usually 70 to 90%. Then they collect payment directly from your customer. Once your client pays in full, the factoring company sends you the remaining balance minus a small fee. And no, factoring isn't just for struggling businesses. It's a smart solution for growing businesses too. Whether you need to make payroll, buy inventory, or jump on a new opportunity, factoring helps you stay cash flow positive. There are three main types of factoring. Recourse factoring is more affordable, but if your client doesn't pay, you're on the hook. Non-recourse factoring shifts that risk to the factoring company, but it comes at a slightly higher cost. And spot factoring gives you flexibility. You can choose to factor just one invoice when needed. Take XYZ Manufacturing, for example. They had a $100,000 invoice and couldn't wait 60 days to get paid. So they used factoring, got $90,000 up front, and after the customer paid, received the remaining $6,000 after fees. That's smart cash flow management. Factoring also saves you time. No more chasing down late payments. The factoring company does that for you, so you can focus on running your business. There are costs, of course. Factoring fees typically range from 1 to 5%, depending on things like the invoice amount and your customer's credit. So it's important to read the fine print and understand any extra fees. Not sure if factoring is right for you? It's most helpful for industries with long payment cycles like transportation, healthcare, manufacturing, staffing, and oil and gas. And good credit? Not required. What matters most is your customer's ability to pay. If you're exploring alternatives, consider traditional loans, lines of credit, or invoice financing, where you borrow against invoices but keep collection responsibilities. Bottom line, factoring gives you fast access to the cash you've already earned. It's flexible, efficient, and can support your growth. If you're ready to take control of your cash flow, factoring might be the key.